I want to welcome into the show Jay Young, CEO of King Operating Corporation. He's the author of The Upside of Oil and Gas Investing. Hey, Jay, thank you for coming on.
Hey, absolutely, Stacy. Glad you had me.
Well, I'm glad you could make it on a Friday evening. And I got to tell you, oil dips below $100 to pre-invasion levels as recession fears grip energy markets. Tell us more.
Yeah, well, Stacy, let me tell you what's going on right now. I mean, we're seeing inflation, recession fears. China's going through some COVID. This is temporary, in my opinion, about what's going on in the marketplace. We're not going to see. We're not, and I wrote in the book, The Upside of Oil and Gas Investing, all about the supply and demand and what happens and what's going on and why in the world. Why are we going through all this? What's going on with this $5 gasoline or whatever you're paying wherever you are? I'm in Nashville tonight. I'm from Dallas, in Nashville. And gas is right below $5, and I don't know what's going to, in my opinion, we're seeing a recession now, but we're going to see a place where oil is going to go back up in the summertime. It's going to go back up, and until our supply oversupply, unless we oversupply our demand, we're going to see these prices staying higher. We need to drill for oil and gas in the United States. Bottom line is we need oil and gas, and Biden's over in Saudi Arabia, and I don't know what happened there, but I can only imagine when he's asking the Saudis, hey, can you sell us more oil for less money? I don't know how that's going to go. I can't see that going very favorable.
So the big announcement is that the barrel of oil, the price per barrel of oil is at pre-invasion levels, but you're saying the prices aren't going to come down because this is over fears about a recession. So this isn't good.
Yeah, I don't see, because we don't have the supplies necessary in the United States right now to meet our demand. So and if we had, if we were more pro drilling, if the federal government would allow the Keystone pipelines, the permits, and just talk, to everybody and say, hey, you know what? We're on a short leash here. We've got to drill for oil and gas in the United States. State governments, there's four reasons why we're not oversupplying our demand right now. And it's the federal government and state government. So we're trying to drill wells in Wyoming and Colorado right now, and they've got us, they're putting us back 3 to 4 months before we can get a permit to drill for oil and gas. The public companies are still like Exxon. Exxon made $6 billion the first quarter this year. Well, they spent $10 billion buying back their stock instead of putting that money to work in the oil field, which is what they would normally have done in most cycles. I'm a fourth generation guy. I've been around this oil business for a long time, Stacy. And what happens is when you have high oil prices, normally the best cure for high oil prices is high oil prices, because people start drilling because economics, internal rates of return look great. Everybody's like, oh my goodness, $100 a barrel, because if you're drilling a well and it produces 10,000 barrels a month, well, man, if you're drilling it at $20 a barrel, that's not good. If you're doing it at $100 a barrel, that's even better. So economics are so much better at a higher price, and public companies are just not doing it. They're just not coming back to the markets drilling for oil and gas right now. So what we're going to see is higher oil prices because of that. Private equity companies are not necessarily coming back into the markets yet and putting all the money back to work. They're not doing it yet. So until they do that, until they do all four of these different items, and the federal government's got to be more proactive, and they've got to be, more about, hey, let's drill for oil and gas, and it's already 100% write-off to invest in oil and gas. But if they give some more tax credits or just talk more favorably, these ESG people, the environmental social governance, these people, Stacy, are talking, and when they talk, people go, yeah, you're right. We don't need oil and gas. We don't want oil and gas in the United States. And when you put people on the board of Exxon and they talk about it, they don't increase their rig count. That's what drives this. That's what the data points. And when I say I feel like oil and gas prices are going to go up, we're not seeing the surge in drilling rigs or drilling for oil and gas in the United States like we should in normal times when high prices go up. We normally see a surge, an increase of, they normally put 1,200 rigs to work in the oil field. We're not seeing that. And because we're not seeing that, we're not going to oversupply that demand that we have right now. And if we don't have the oversupply, and our demand stays strong, because right now our demand's coming down because of different factors. But they talked about Ukraine and talking about trying to, the Russian oil situation. That's a big mess up. So what do you do there? There's just this world supply disruption right now. We're not seeing what we need to be seeing in the markets. Therefore, we don't have the oil necessary. And it's all about economics 101, supply and demand. So we're just not seeing what we need to be seeing normally in oil and gas.
So we do have the ability to change those scenarios, but because of ESG from BlackRock and all of these different forces that are at play, they're kind of outside of what the American people are paying attention to. It also impacts what's happening with the price of oil. So they are making this announcement as if it's such good news, but it really isn't.
Right, exactly. It's not curing the problem. Biden puts 1 million barrels of our strategic reserves on the market. Okay, good, but it's not enough. We need more. We need more oil, and we need to get that in the United States, because then we can not have to worry about as much OPEC or OPEC plus. We don't have to go beg for oil. Like I said, who wants to sell more oil at less prices? Doesn't make sense. We've got to drill here in the United States. We need to be more optimistic. We need to. And hey, I was in California last week. Man, there's Teslas all over the place. We're in Dallas, where I live. You don't see very many Teslas. So it's coming. Electric vehicles are coming. It's just not going to come fast enough right now to slow our demand down. Our demand's not going to slow down anytime soon, and because it's just not. And the demand for oil, and of course, Stacy, we use oil for more than just gasoline in cars. It goes on those tires. It goes on those tires on those Teslas. And it's going to be weird. We're going to have all electric vehicles, but it's going to cost you $20,000 a tire because oil and gas prices are going to be so high. So we use 40%, maybe 45% of a barrel of oil for gasoline in cars, trucks, and airplanes, where normally you would think, oh, okay, well, let's just do all electric vehicles. Oh, that'll solve our problem. No, that's not going to solve our demand problem. We're seeing
and there's not enough infrastructure to charge them. So the thing with the electric vehicles is there are people who are buying them, but they're not going to reach a nexus point where you can tip over and say, okay, now we're an electric vehicle country, until two things happen. The infrastructure has to occur, and parents with large families have to adopt, because the parents with large families own more than 2 cars. They usually own 4 or 5 cars, 1 per teenager who's driving. So those are used cars. They buy them. That's a 2011, that's a 2010, it's a 2013 that they bought. They paid it off, and so if the kid crashes it, it's not a big, huge deal. You're not giving a 16, 17, 18-year-old, you're not even giving your 22-year-old who just graduated from college a brand new electric car, because they start out at $55,000. So the problem that they have on adoption is they can get a bunch of limousine liberals to buy them, but they still don't even use it as their primary driver. So the whole discussion about the electric cars kind of drives me crazy, because it's like we're talking about something that isn't ready to happen yet. So it's a waste of our energy and our mental capacity to continue to focus on cars that, in California, when you talk about how many people there have Teslas, they don't have enough grid capacity for everyone who owns an electric car out there to charge their car every single night. They don't have enough capacity for everybody to run their refrigerators and everything else that they have that's on the electric grid. So they're an example of what not to do. We shouldn't rush out and buy electric cars when there's no infrastructure to support them.
Exactly. You're exactly right. And we don't have that, and we're not going to have it anytime soon. And because of that, oil prices are going to stay higher. Gasoline prices are going to stay up. And just like we were talking about with BlackRock, they poured hundreds of billions of dollars into the markets when the price during Obama was $100, $120. It reached $147 a barrel. Well, then Trump comes in, all of a sudden BlackRock starts investing hundreds of billions. along with other private equity companies. There wasn't anybody on the board saying don't drill for oil and gas. And Harold Hamm, I mean, Continental Resources, a great example. I mean, a self-made man, he went public, and he is right now buying back every bit of stock that he can because he doesn't want to have any public stock because he doesn't want anybody to talk to him about increasing rig count. Devon Energy right now, I talked to somebody with Devon Energy, and they're saying, I said, hey, man, are you guys going to increase your rig count because you just bought this incredible project out in the Permian Basin, which is an incredible project at $100 a barrel. He said, man, he said, we can't. Our board won't let us increase our rig count, so we've got to shuffle other assets, and good for them because we picked up an incredible 50,000-acre play in Wyoming. That's an incredible project because they just don't have the rig power to do everything, and so they let us have a really great project that we're drilling in right now, or as soon as we can get the federal or state regulations, you know, we can do that. That's another, you know, delay, if you will, on the state government I mentioned a minute ago. So we're just not, we're not there. We're not there, and until we, and that's what John Kerry was saying. John Kerry's like, well, hey, in 5 or 10 years we're going to be okay. Well, John, I mean, you know, you're sitting there going, okay, well, I'm in my private jet, I'm getting my limo, and he doesn't care what the price is, $3 or $2 or 5 or 10 or 20. He doesn't care. I mean, it's not going to affect him whatsoever, but it does affect everybody else. I mean, I've got a guy that I work out with, and he was saying, man, I wish I could go to Austin this weekend. He said, but I can't afford the gas. I just can't afford it. So he is, you know, and he's in that bubble saying, you know, if the price is $2 to $4 to $5, $6, he can't do things. And that's unfortunate. That is really unfortunate because we're just not there, as you mentioned, Stacy. We're not there yet. I don't know when we're going to get there, but it's not going to be anytime soon. And until then, the American people are going to pay more at the pump. We call it pain at the pump.
Well, the pain at the pump will continue as long as the Democrats are in charge. I thank you so much, CEO of King Operating Corp., author of The Upside of Oil and Gas Investing, Jay Young. Thank you for the time tonight.